Hey, what's going on, guys? Travis here with JT Wealth, and as you're all probably well aware, cryptocurrency has been taking an absolute beating lately. So has the overall market. But for this video, let's focus on where the bottom is for Bitcoin. How low can Bitcoin go and why? Also, with big cryptos like Bitcoin and Ethereum at about 50% off their all-time highs, what's next? What's in store for cryptocurrency going forward? We're going to talk about that in today's video. Let's get into it. Alright, welcome back, guys. Thanks for checking out today's video. Hopefully you find some value in it. If you do, smash the like button for me and consider subscribing to the channel if you haven't already. And like I said in the intro, we're focusing on cryptocurrency today. It's taken a massive dive. Bitcoin and Ethereum both, as well as the crypto market on a whole, down about 50% from their all-time highs. $1 trillion lost off the crypto market, which is roughly the economy in the UK, I believe. So this is a lot of money, and people are wondering, where's the bottom? Is this a buy the dip situation? Well, that depends on if you think cryptocurrency has the fundamentals to support that. We're going to talk about all of this and more in today's video. Before we dive right into the meat and potatoes of the video, just a quick reminder, this video brought to you and sponsored by Crypto.com. And Crypto.com is still the world's fastest growing crypto app, and you can use my link, you see it right there on your screen, Crypto.com/app/JTWealth. It'll also be in the description section and the pinned comments section down below, and you can use it to get $25 free when you sign up and fund your account. Alright, so a lot to cover. Let's start with the Bitcoin and Ethereum prices and what they've done over the last 6 months. Taking a look at Bitcoin, it's trading at around $37,000 today, which is up over 8% on the day. It definitely needed that after coming down significantly recently. Now, as far as the last 3 to 6 month time frame goes, you can definitely see it coming off that 67,000 some odd high back in October, November time frame, and now we are down to 37,000. Not as low as it's been. I think we hit 34,000 as a low, but nonetheless, Bitcoin is down significantly. And we can almost see a mirror image over there on the Ethereum screen. Ethereum up almost 10% today to over $2,449. But again, the same high peak point at about $4,600 back in November, I would say. And now we're down to $2,400 and some odd dollars. Again, not as low as it was yesterday, but it is definitely trying to climb out of one heck of a hole. We are seeing just an absolute descending line there from that peak. So what's the floor? Where is the absolute bottom basement for cryptocurrencies like Bitcoin, like Ethereum? How do you know if you're going to buy the dip if it's just not going to plummet even further? Historically, you buy the dip on companies with really strong fundamentals. Does crypto have strong fundamentals? Does Bitcoin hold a fundamental that would allow it to carry value even as the price drops? I don't know, but some of the analysts are talking about this specific point. Check out this article from Barron's. Alright, and this article came out yesterday, and it says why the floor for Bitcoin is zero. And a few thoughts early on. The recent crypto buyers who are sitting on deep losses surely don't need to be reminded that Bitcoin has no cash flows or dividends. But for the benefit of the inexperienced trader who are being urged in meme trading chat rooms to buy the dip, a reminder that the floor for cryptos across the board is zero. Now, just a quick reminder to everybody watching my videos, we bring stock-related news. This is not my opinion. I have shown articles on how Bitcoin's going to go to 100,000, Ethereum's going to go to 10,000, because that's the news of the day. Right now, this is the news of the day. Whether or not it's true or accurate, I don't know. I'm just bringing out what's there so I can show both sides of any situation. Now, the person who wrote the article went on to say, I'm not saying it's headed to zero. I noted that the market value of crypto was approaching the money supply of the United Kingdom. That's enough critical mass to suggest the asset class will be around for many years. In fact, I'm not sure there's a mechanism for broken cryptos to just disappear like defunct companies. There could be thousands of these things floating around like abandoned space debris. And I don't doubt that there will be periodic fierce crypto rallies, but the buy the dip advice is best reserved for things that become cheap relative to some measure of fundamental value, and a crypto, in this man's opinion, does not qualify. Now, as Nassim Taleb recently tweeted about Bitcoin, quote, "A falling price makes it less desirable," end quote. That's because Bitcoin, as he puts it, is a contagion-driven asset. and price is its only information. And he may be right about that, but I think it's missing a key point. Bitcoin, cryptocurrencies, a lot of these, they don't exactly have a 10K you can sit down and read. You're not going to get an annual report, and you can't reach out to the CEO to see how the company's going. All you get is the price. So all you're seeing is emotional buying and selling, which is the result of these massive ups and downs in cryptocurrencies. As the price goes up, people get excited, they get FOMO, they buy. As the price goes down, fear kicks in and people sell like wildfire. So it's emotion that's really driving these decisions, pushing the price of these cryptocurrencies in such dramatic directions. Now, recently CoinDesk put out this article that said Bitcoin is headed for the worst week in 8 months as traders lament kind of a Pikachu pattern. And here you can take a quick look at how the emotions play roles in stock valuations, whether it's cryptos or regular equities. This is just kind of how things play out, and it's definitely what's taking place in the cryptocurrency market right now. But one of the bullish drivers for crypto over the last 2 years has been the surplus of pandemic-related fiscal and monetary stimulus globally. And much of that is coming to an end. And that's according to David Duong, who's the head of institutional research for the big US cryptocurrency exchange Coinbase. But we can understand a significant drop, but we are looking at Bitcoin being down 50% off its all-time high. What is going on? Well, MarketWatch hopes to address that in their article, Bitcoin Slumps with Stocks, and is now down nearly 50% from their all-time high. Now, Bitcoin prices did slump even further over the weekend leading up to Monday's huge fall as well, as the sell-off of riskier assets like stocks spread to cryptocurrencies. Now, Bitcoin has now shed 50% from its record high in November. Bitcoin fell as low as $34,042 on Saturday, a drop of 7.2% before pairing its losses. And then, of course, they occurred again on Monday. But the world's largest cryptocurrency by value stabilized late Sunday, fell again on Monday, and is crawling back up now. So at one point, Bitcoin was down about 20%, Ethereum down even further, down 27%. And for anybody who bought Bitcoin at the very start of 2022, you have now seen your Bitcoin price drop 24% in 3 weeks. Now, chief market analyst of AvaTrade, Naeem Aslam, says that the pessimism continues to grow among investors and traders when it comes to riskier assets, and this is chiefly influencing the price of equities and Bitcoin. The thing with Bitcoin is that when it begins to fall, the price action drops like there's no tomorrow, said Aslam. And he added that in January, it also tends to be a very volatile month for the cryptocurrency historically. And like I mentioned at the beginning of today's video, this video is sponsored and brought to you by Crypto.com. And Crypto.com is still the world's fastest growing crypto app. You can join 10 million plus users buying and selling over 90 cryptocurrencies at true cost. Or you can get their Crypto.com Visa card to get up to 8% cash back, or just grow your portfolio by earning up to 14% interest on your crypto assets. You can also use the link you're looking at on the screen there and get $25 free just for signing up and funding your account with Crypto.com with some of the lowest cost Bitcoin or Ethereum or assorted cryptos you're going to get in the last year. Now back to the Bitcoin price, the recent drop means that the price is in danger of being down over the year. By that I mean this time in 2021, Bitcoin was trading at around $33,000 just days after that. It did see a price rally that took it up to $50,000, and it performed strongly through most of the summer, but we're not too far off that $33,000 mark, what we saw yesterday when we were trading at 34 something, right? So Bitcoin's decline from its peak has wiped out more than $600 billion in market value, and over $1 trillion was lost from the aggregate crypto community. And of course, all of this happening only weeks after different people like Goldman Sachs, for example, put out an article about how Bitcoin could reach the $100,000 mark. Check out this article. This came out on January 5th of this year, and it says Goldman Sachs thinks Bitcoin can get to $100,000. This, of course, was a Goldman Sachs analyst speaking on the MarketWatch article here, and the broader adoption of digital assets and Bitcoin scaling solutions could boost Bitcoin's market share, according to Goldman Sachs. Now, we're not saying that's inaccurate, but it definitely has taken a massive dump from the previous levels to where we're sitting at today, which is almost $70,000 below where Goldman Sachs said Bitcoin could be only some weeks ago. But let's face it, as cryptocurrency gets more and more accepted, gets more government oversight, more regulation, it is acting more and more like a stock, like an equity. And in the cases of stock and equities, they're pending federal rate hikes, which is causing people to be nervous. Lending won't be quite as simple. There won't be as much liquidity in the markets. And now all of a sudden we're dealing with Ukraine on the forefront of the news and the media, meaning the fear of sending US troops overseas, maybe not necessarily war, but certainly conflict, is weighing heavily on the US people. And that is causing a lot of people to pull back and be a lot more conservative with their investments. Fears of a conflict pummeled shares across the world while bolstering the dollar and oil. Nerves over the Federal Reserve's two-day policy meeting that starts Tuesday, or today, added to the mix, with the U.S. Central Bank expected to confirm it will soon start draining the pool of liquidity that has supercharged growth stocks. Now, the story is really how aggressive is the tightening, according to Mark Chandler, chief market strategist at Bannockburn Global Forex in New York. Forgive me if I just messed up that name. But he noted that the Fed move to reduce the size of its balance sheet will tighten conditions along with higher interest rates. And cryptocurrencies are falling along with all other risk assets as people are pulling back on the risk broadly. Now, if you're considering that the equity markets are kind of mirroring the crypto markets as they both considerably dropped recently, maybe we could take a look at what people are saying for the S&P 500 and see, hey, how far could that drop in trying to determine where the real bottom for cryptocurrency is? Surely zero exists. But realistically, will people ever let cryptocurrencies like Bitcoin or Ethereum drop to zero? I doubt it. So if we're looking at S&P as a benchmark, this is where analysts think it could continue to fall to in the near term. How low can the S&P 500 go? Here are forecasts from three widely followed experts, and their differences are drastic. Sam Stovall of CFRA says the S&P 500 target could drop 4.9% from Monday's close. Obviously, we're up slightly today, so that's a good thing. But Bank of America's Savita, I'm going to mess that up so you can read it for yourself, 15.1% from Monday's close, and GMO's Jeremy Grantham, 43.3% down from Monday's close. Obviously, drastic differences between these, which kind of just solidifies what we all know, is that these financial analysts, they're so far apart on almost everything, whether or not you should buy or sell something. So we don't want to lend too much credibility to this, but do acknowledge that these possibilities exist. That's it for today's crypto market news. So much going on. If we're being completely honest, I used this opportunity to buy into Ethereum big. I saw $2,400 at one point, maybe. I think it was what I was buying in Ethereum at. So, in my personal opinion, I think Ethereum has the better total use scenario over Bitcoin in the long run. So that's where I went with my money. Also, Ethereum happened to dip even more than Bitcoin. So I saw it as a even better opportunity. And that's where I put a vast majority of my liquidity into Ethereum over the weekend and definitely yesterday. So yeah, I'm still holding both Bitcoin and Ethereum for the long run. I definitely expect it to recoup its losses and continue moving upwards, whether it's this year, next year, or the year after. Doesn't matter to me. I'm a long-term guy, so I'm going to continue dollar cost averaging in. And again, thanks for watching today's video. Hopefully you found some value in it. And until next time, bottoms up.